I'm Elizabeth Warren, Chair of the Congressional Oversight Panel. I'm here to introduce our December Oversight Report, Taking Stock: What has the Troubled Asset Relief Program achieved? Now, we're approaching the end of 2009, and up and down Wall Street, companies are drafting annual reports. They are looking back over the last 12 months, preparing to tell stockholders what their company did right and what they're resolving to do differently next year. In our December report, the Oversight Panel is attempting to do something similar for the bank bailout, a year-end report issued to you, the taxpayer. After all, you are the investor who foots the bill. Although we can speak loosely of the bailout, TARP is not just one program. It now has divided into more than a dozen sub-programs covering issues from bank capitalization to the auto industry to home foreclosures. The programs that make up TARP are, in turn, only a part of the government's broader response that includes the stimulus package, the Federal Reserve actions, and the FDIC guarantees. That means it's impossible to render a single verdict on TARP. But if we break TARP down into its component parts, we can draw some fairly strong conclusions. So first, TARP has done some things right. Experts agree that TARP was an important part of a strong government action that stabilized the financial system, that helped restart the flow of credit, and that averted an even deeper crisis. That's the good news, and it's very good. Of course, if you've watched the panel's past videos or read our past reports, you know that we also have some very serious concerns. In particular, we're worried that TARP has created implicit guarantees. After the government's extraordinary intervention, pumping billions of dollars into banks with no questions asked, the biggest of these banks may believe they are insulated from the consequences of their own bad choices. We should not be surprised to find that these banks will take on even more risks, knowing they can keep all the profits if they win, and they can shift the losses to the taxpayers when they lose. This approach infects pricing. Who wouldn't rather invest in a big bank with a guarantee than a small bank with no guarantee? It also means that our financial system is less stable and that taxpayers could be called on again and again to bail out these banks. The panel is also deeply concerned about accountability in the TARP program. More than a year after TARP's enactment, it remains unclear where the money went. The public knows to whom Treasury gave the money. What is not clear is what the recipients did with it, because Treasury simply didn't require enough disclosure. Also unclear are Treasury's legal justifications, specific goals, and benchmarks for many TARP programs, as well as the criteria by which Treasury makes many of its judgments. This lack of transparency damages the public's understanding of how and why our taxpayer dollars are being used. We are also worried that several TARP programs simply aren't working as advertised. As you'll recall, when the bailout was initially proposed, its stated goal was to buy up troubled assets from banks, hence the name, the Troubled Asset Relief Program. But we're more than a year into TARP, and so far the government's efforts to deal directly with toxic assets has been very limited. We are worried about the health of the banks, both large and small, and about the coming wave of commercial loan defaults. Small business lending remains stalled, with disastrous effects for the businesses, for their employees, and for the economy. We're also concerned with Treasury's foreclosure prevention program. 2 million families have already lost their homes, and millions more foreclosures are on the horizon. But the Making Home Affordable program has not yet shown that it has the scale, the scope, or the permanence to resolve the foreclosure crisis. Finally, it is clear that the unprecedented government actions taken since last September have not been enough to stem the rise of unemployment, which is now at its highest level in 25 years. You can read our full report and you can offer your own thoughts by visiting our website. That's cop.senate.gov. So where does that leave us as we take stock of 2009? There's no doubt that this year has been difficult for most Americans, perhaps including you. You don't need me to tell you about skyrocketing unemployment, about historic levels of foreclosure, or about the reluctance of banks to lend and consumers to borrow. This year has also brought a measure of stability to our financial system. We are not peering at collapse as we were a year ago, but we see an economy still dependent on taxpayer bailouts, still struggling with constricted credit, rising foreclosures, and exceptionally high unemployment. We're still facing a long road back to a robust economy.